Virtual. Your tune is now on. So, again, I'm your host, Lee Albritton. I'm here in the eastern part of North Carolina, in Kinston. This is Lenore Community College's Small Business Center. Thank you for joining us. I'll remain on session for the first hour. If you have any messages after I leave, please email me or share your question with Steve, and he'll forward it to me. To invite you to do what you want to with regard to the camera. Certainly want you to mute your microphone while Steve is presenting. If you have any questions, you can always hit that reaction button or on the bottom and raise your hand, or you can go into the chat feature, which you can also activate by clicking on the chat icon at the bottom of your screen and put in a message there to him so that he knows you've got a question. Really important, if you would complete the survey. It helps ensure that small business centers across the state continue to get funding from our state General Assembly. That's why we're able to provide all these services for free, and you can help continue that history and continue that funding by completing a survey. Certainly would love to hear what you think about the topics, and if you have suggestions for future topics. I'm new at this. Would love to know what you need, what you think benefit you most in your venture to start your own business. And again, thanks for joining us. I'm going to turn it over to Mr. Steve Carver and let him start today's webinar. Thanks again for joining us.
Thank you, Lee, and I appreciate you being with us for the first hour. And have any comments, click in at any time. You don't mind being interrupted, it's perfectly fine. Hi, everybody. I'm Steve Carver, talking to you from my office in Dunn, North Carolina, presentation number 1180. And moving on, and certainly appreciate y'all joining up with us today. We've got several folks here for the first time. We're recognizing your names anyway. I am not a lawyer or a CPA. I'm a fellow that's been in business for 66 years and counting, and serve lots of customers and do business every day. I've had a pretty good morning this morning, sold a few parts and quoted a few items, and started putting together a structured marketing campaign for our main season of months in the equipment business, which will carry us through mid-July. So structure is the key to staying in business a long time, and look forward to doing that, just like it's structured to keep these webinars going on. So thank you for joining us. My main advice to you to begin with is always get a second or a third opinion when you're getting ready to make a decision that you hadn't made before or concerned about. That can really help give you different insights and options to talk with someone that knows a little bit about business and you, and has your best interest in mind. The very best place that I know of that you can get expert, all-around small business support and opinions and advice is from your small business centers throughout the state, located at various community colleges. If you're not in the Jones and Greene and Lenore County areas of North Carolina and would like to get in touch with the small business center near you, just write it over in chat. Let me and or Lee know that you'd like to get in touch with the center closest to you, and we'll certainly help you do that. Let me encourage you, if you would, to go to the chat board and give me your name and hometown and email address. Liz, I see your email address is not listed here. Laura, I think we've got yours. And y'all sign in over there, and that way we'll be able to send you the study guides and any information that you need. If you do not want me to send you any email, write that in there. If you can give me your email address, and I'll just send you the study guides. But if you want to be restricted, you let me know. Otherwise, I don't send you a bunch of stuff. I send out free study guides that are related to our lessons, and also I share with you various information that comes along if I think it's related to your type of business. So it's a pleasure to work with you. Your success is our goal, and I'll certainly look forward to working with you anytime. This is our first lunch and learn session for Lee as a new director, and I haven't done one in a number of years, so we've really enjoyed our experience with you guys during these lunches. This is number 6 of 7 that we're going to be doing. So next week, this same time and station, we'll be right back here. So I'm enjoying our lunch date with you. I just got a Diet Coke to drink on while we're talking, but if y'all want to eat your burgers and whatever, go for it. Our course today is going to be focusing on bookkeeping, forecasting, and negotiating, which are indeed very important business skills. I want to tell you right up front that I am not going to teach you how to do bookkeeping. That's not the function here. That's not what I'm about. What I will focus on when we get to that part of our program is what a manager, what a new business owner needs to know, what can glean from the bookkeeping information. Because a lot of folks now with QuickBooks and everything in the field just feel like, well, I don't have to worry about bookkeeping anymore. I've got QuickBooks. It does it automatically, and it will. But I'm going to unpack that and show you how important bookkeeping information can be for you. Again, use your chat button. Keep me busy looking at it. Lee will monitor it while I'm talking the first part. But if you have questions or want me to send you items that I mentioned, I'll just mention it in chat. If you don't want any information from me, you can put that in there as well, and I won't send you a thing. It won't break my heart, and we'll move forward. Emailing me if you want to take a screenshot of this or write it down. I've got 2 email addresses that you can use, one AOL address here and one Gmail address. And so you're welcome to copy that and use them. I'm here volunteering to help you any way that I possibly can. Related to this class, there were 8 study guides that Lee has emailed to you, and I will re-email to you tomorrow if I have your address, talking about generally on all of our classes, you'll have a study guide that's got a number on it that represents my presentation number, and it's the outline of the talking points. Then we've got several more that are included in here. One that is new to you, if you've been attending, is a quiz. Yes, this is a 14-hour course that you can win certificates or earn certificates, achievement certificates, and also members to the Academy of Associates and Entrepreneurs. And the quiz that I've sent to you is an easy one because it's got the answers to it right there for you. So what I want you to do is open that up, read it carefully, kind of absorb what we're saying and what it's all about. And then next week I'll send you a quiz that does not have the answers, that I'll ask you to put the answers into it, insert the answers, any comments that you might have or suggestions as well, and send it back to me. Email it back to me with your name, the way you'd like for it to show up on the certificate, and your mailing address, and I'll prepare them and send them to you free of charge, and just look forward to doing that. And I think you'll be very proud of yourself and the certificate that we're sending. Next Tuesday, which we'll wrap up this particular course, we're going to be talking about the basics of taxes, just giving you a good kind of overview about what new business owners kind of need to know about taxes. I'll focus on deductions, showing you what normal business deductions you might take as a new business owner. I'll focus on depreciation, which is a topic that most new entrepreneurs don't have a clue what it's all about, but I'll give you a good insight into how that can help you a lot. Talk about record keeping, and then share with you some secrets that will help you close sales based on my experience through the years of some little things we can do to help customers go ahead and move forward and give you that order that you're after. I have been keeping up with attendance, and we certainly do appreciate it. We've got several of you that has 100% attendance, and that's certainly great. But again, the more often you come, the better we can serve you. So I'll be keeping up with it so we can see your certificates. Lots of folks have come just for 1 or 2 times, and they keep coming back. So that's a good thing. If your phone number is one of these numbers, how about letting me know over in chat that your number is so-and-so, and give me your name and email address so I can match it up, because sometimes when y'all don't give us that information and I send my roster into Lee, we really don't know who it was that was attended or such as that. So we have 3 people so far that we don't know who it is, and this was the phone numbers that came up. So you can help us with that, and that may help qualify you for your certificate. I'll lay a lot of information out, and it's up to you to use what you like. You can do the homework, you can do the extra mile stuff, you can apply everything today and just really go for it, or you can just relax and let this soak in and come as often as you like, with no pressure at all. But we'll do our best to try to motivate you if that's where you want to go. So let me share with you what some of our fellow classmates are doing, and most of these will probably show up here this afternoon as well. Jezrelia is over in the Garner area close to Raleigh. She has just come in from the country of India and getting ready to start her new consulting business, and otherwise highly educated young lady, and looking forward to getting her business up and running. Kenyatta is from Clinton. She's over in Oklahoma now, learning about how to get her new business started. She's going to be doing the gummies for folks that need them to help them sleep and otherwise. So good luck with her. She's learning about that product and how to package it and how to market it. Carolyn Jacobs has been with us every week, and Carolyn's starting a new nonprofit over in the Mebane area to help children with special needs, and she's been working really hard at that, and they has a real comprehensive business plan that she's already presented for us. Christina in Jacksonville is in the bling business, and she's joined us a time or two, and I've been monitoring her on Facebook, and she's just doing a great job with her $5 bling business, Bling with Shaquille, and she is a real marketing whiz. If you're into this type of business, you might want to make note of this, Bling with Shaquille, and check in on her Facebook site, because she's on there every day with a new video and pushing the product, and apparently doing really, really well with it. So that's the kind of entrepreneur efforts that we like to see. Stephanie is new to Raleigh and Clayton and working hard on getting a new business started. She's not quite ready to announce it, but she's been in communications with me talking about different things, and we're glad to help her any way we can. Lynette in Raleigh is in the singing business. She is a jazz singer, and she also does faith-based songs, and just seems to be a real fine lady. And been with us on a regular basis during these meetings, so hopefully she'll join us a little bit later. She can join in. LaShiva in Laurinburg, a great personality. She got some wonderful videos on Facebook. She's got her mission statement going. She's starting a business doing notary public work and other things. So check her out on Facebook, LaShiva Dunlap, and we wish her the very best as well. Invite you to find us on the Academy on Facebook, and me as well, but we have a page there that you can join and follow all that we're doing, and glad to do that. Thank you all for joining us. We've ended up with a good class today, a good number in class. Let me share with you, it's perfectly fine to check in a little late. I know that y'all don't run your daily schedules based on the 12 o'clock noon start time. So with any of my seminars, coming in late is perfectly okay. I understand that you've got other things to do in your life, but if you can get here close to start time, that makes it a little bit easier on everybody. So let's go forward. Send me information on you, your business, photos. Tell me about your business. Do your homework assignments and send them to me, and we'll do all we can to, number one, help you get to the next step that you want to get to. And number two, we'll promote you right here amongst your classmates in the academy. And in addition to that, I'll look at your marketing material you're sending to us. We'll use it as a study material in class, and help you improve it, give you your comments, get a feedback. The nicest thing about these classes by the Academy of Entrepreneurs and Associates is you get to know each other. And I encourage you to share in the chat board. Y'all can talk to each other, maybe recognize some friends there or some business opportunities. I welcome that and encourage it. And so just sit back, make yourself at home, and let's move forward, see if we can help our businesses go as we go. Each week we've added a quote that's worth remembering. So we'll have a new one for this one, but let's do a little review here. Walt Disney told us that the best way to get started is to quit talking about it and start doing it. So I certainly agree with that, and most of y'all have been doing that as well. Michael said there's no finish line in entrepreneurship. It's just 1 mile marker at a time. And how true that is. We all just have to take it one day at a time, one step at a time, and get to that next point and move it. The key is staying in business long enough to get good at it and remain sustainable. Bill Gates said that we'll learn more from our unhappy customers than from anywhere else. And you know, that's kind of strange to say, but I think he's exactly right. Because if you can pay attention to and listen to what your unhappy customer is saying and make the adjustments to turn it into a positive situation, that generally will give you a customer that will stay with you a long, long time. Nelson told us that maybe more than anything else, success and sustainability with working with customers is to always give them a little bit more than what they expect. Y'all excuse me right here. So I agree with that, and that doesn't mean you got to give them money or give them discounts. What it does mean is you got to try to create that relationship with them, make them feel important, be nice, listen to what they're saying, offer them advice that will help them, be a giver instead of a taker, give them a little bit more than they expect, because you know, in today's world, most of the time we all don't expect a lot from people that we're doing business with. And when someone like you comes along that's going the extra mile to see they're 100% satisfied, that's a good way to start that relationship and keep them on board with you. Mark Zuckerberg said that the biggest risk we'll take is not being willing to take any risk. And he's right on target with that. If you're an entrepreneur and you're dealing in a for-profit business, I'm going to tell you there's risk involved. And if there's a risk involved, by golly, you got to take it. So how do you not take risk and get in business? I don't have an answer for that. You can sit up in the stands and watch the ball game if you like. You can sit up in the stands and watch the rest of us out down here in the business world go at it as hard as we can, like trench warfare, and you don't have to take any risk sitting in the stands. But you're not going to make any money either. So just keep that in mind. You got to get in the game, put your toe in the water. And then Jenny Romney said, you know, your value is not what you know, it's what you share. And I think there's a lot of good information there. The willingness to share yourself, share your knowledge, listen to people, give good feedback. I think that's going to be so important. So someone says it's not how people don't care how much you know until they know how much you care. Maybe we can say until they know how much you're willing to share. Might go right along with that. So my job is to be assertive. Your job is to be assertive as well, because in business, nobody is motivated usually until someone else is assertive. So let me encourage you, if you're shy, hadn't had any experience in helping move people along, the word is assertive. You don't need to overdo it, but you do need to assume it as something that you're going to need to do to keep a business going forward. Motivate, motivate, motivate. That's what we'll do. And so I'm encouraging you to accept the principle that your job is to find the endurance, find the intestinal fortitude, energy, and spirit to stay in the game. Staying in the game is so very important to be able to move along in entrepreneurship. So let's talk about cash flow, which was our main subject last week. I want to remind you that having things that people want is one type of profit centers that you would have. Things that people want, that is impulse items. luxury items, things that they can get along without. Some of your profit centers, some of the things you're selling, products or services in your business, need to be things that people want. And also, you want things that people need, that they got to have. Things they're going to buy, whether it's good business times or bad business time, whether the economy is in a slump or wide open, whether the president's talking about putting tariffs on this or firing 100,000 people here or there, whatever it is, people are going to buy what they need. So as you're looking at your business plan and getting set up, make sure you've got some things that people need that you're offering, because that's going to help you remain sustainable in tough times. But also, just as important, it's important that you have more diversified products and services that you're offering, so you can have some things that people want as well. And when you have the mix, then you have the ability to say, and by the way, I've got this, this, and this. You're going to be able to stay in business a whole lot more likely than otherwise. Things that people want and things that people need. So think about what you're doing in your business, because a lot of you may already have something going on. And what you need to do to make it sustainable or be a lot more profitable is add a few more profit centers based on whether it's things that people want or things that people need. The drill skills now, we'll wrap them up. We've had those in our previous meetings. There's 40 of them altogether. One of your handouts does this. One of your homework challenges is to take these drill skills, look at the videos that are listed in the study guide, and then paraphrase how that drill skill can help you in your business or how you plan to use it, and send that to me. And that'll be a qualifier to get you into the, one of the qualifiers to get you into the academy. So here we go. Let's look at these drill skills. We're going to start out with number 33. We've already been through 32 in the series. I want to just give you some old-timey real advice that folks that's been around in the South for a long time know this, but a lot of people just don't know it. And when you have a chance to meet and greet one of your customers, when you have a chance to meet and greet someone that's been important to your business, I want to tell you that it's important for you to get up out of your chair and leap, not jump on them, but be energetic in getting up and getting that handshake out there or giving that hug there. Or, man, I'm so glad to see you. You know, we miss you. Let people know you care about them. And the more energy you show when you're acknowledging the presence of a customer, potential buyer, potential vendor, just a friend of your businesses, don't be lazy. Don't feel like I'm just going to sit here on my butt and I'll look up at you and say, it's good to see you, Charlie. Get on out of my way. I'm eating supper. We don't want to do that. I want you to stand up, be forthright, smile, show energy, and say, I'm so glad to see you. And then have a conversation with them. Maybe you need to eat another bite of banana pudding or take another piece of spaghetti and chew on it. But there's a time to remember you're an entrepreneur and you need customers. And what salts customers away as raving fans for years and years and years is your personality and whether or not you reach out to folks to make them feel welcome. I see it every day. I see it every week, every weekend. Some do, and a lot don't. I see it in church when people go up to greet you, walk across the way, and come and just say hello to you, and the person just sits there like a knot on the log instead of showing appreciation for the efforts the other person is making. Leap to extend goodwill and to acknowledge folks. Keep your radar turned on. Are we going to drift down the river and just take what comes our way, or are we going to turn our radar on and be aware? There's a lot of difference in being here and being aware. I mean, a lot of difference. There's a lot of difference in talking with a customer, chit-chatting back and forth with them, and hearing what they're really saying. You got to turn your radar on to learn things. And one of the things I want you to learn is what is the next hot thing in your world of business. What's the next thing coming down the line that people are going to make a lot of money on and sell a lot of different items and satisfy a lot of customers? What's the next hot item or service that you can add to what you're doing right now that will really go well with your customer base that you're serving? You got to think about it. You got to keep looking for that next best thing. Diversification and change is what's going to keep you in business. Looking for that next hot thing. Forecasting is a skill we'll dive into big time. But I want to tell you what I want you to remember, that informed and structured forecasting is the key. If you don't get into it, then you're going to be getting all kind of unwanted surprises and curveballs coming your way, pitfalls and unexpected expenses. And the way you avoid these bad things is to know that structured and informed forecasting makes a world of difference for you. This weekend, I was talking with a friend of mine who is a self-made millionaire, done a great job. He's in his mid-40s, just an amazing, intelligent guy. But he's keeping on, and he was telling me about a new thing that he's learning about is forward seeing. He's taking a special course on how to be really more effective in his forecasting through a system of mental challenges and things. I was amazed. I'm looking forward to learning more about that too, because I know after 66 years in business that probably the only reason I'm here and still alive as an entrepreneur is that I was taught early on about forecasting and putting risk management things in place to help from getting knocked down. Because of those risk management things that I've shared with you guys in these courses, I was able to survive 5 or 6 real serious times in my business life where if I hadn't had some good advice and risk management things in place, I'd have had to gone out of business like so many other folks do. So forecasting is a key, and we're going to jump on that tonight. Did you know that you can be a fabulous negotiator? I mean, a trained negotiator. When we start today, if you pick it up and go with it and learn and practice and pay attention next week when we get into our final class, you can be a great negotiator too. And negotiating is important. If you negotiate for all the things you buy, you'll save 5 to 15% probably easy. And if you negotiate and have the skills when you're selling items, you'll probably end up with 5 to 15% more profit at the end of the game. And when you take those two things together, which means you're going to have between 5 and 25% extra money in your business pocket at the end of the day, simply because you knew how to negotiate. So let's pay attention to this, because it can put dollars in your pocket. But we can say negotiating all we want to and chit-chat about bargaining and doing this and that, finding common ground with deals. But that's not the important part. The most important part for you to be a professional, successful negotiator is to know that extreme preparation is the key. Being prepared before you get there. Being prepared to negotiate is the most important key. And I want you to remember that, and we'll talk to you more about it. As we said earlier, but it's worth repeating, because I'd like for you to put this into your DNA so you can repeat it as often as you like, because it's always good for us to hear us say it ourselves. People don't really care about how much you know until they know how much you care. Let's keep reminding ourselves of that and reminding our children of that and our employees. People don't care about how much you know. You may be the smartest dude on earth. You may be an Elon Musk, who's not only a smart dude, but the richest fellow on earth. But these last few weeks, people are starting to see that it don't make a difference how much you know, because it's the things you do that shows that you care about people. That's That's the important thing. Why do you think an employee would want to work for you and help you achieve your goals, help you have a successful business, help you be happy, help you with any family matters that you might need their help with? Why would an employee want to do all that for you if you don't do it for them? Right? One of the most important ingredients in having long-term family type, not blood family, but employees that feel like they're a member of your business family, is that you are thinking about what their needs are and maybe what their dreams are, and how you can work with them and keep them employed with you for both of you to be able to see some dreams come true. Long-term employees stay with you. They don't have to be trained and retrained and retrained. They don't make mistakes after mistakes, but they stay with you only if they think you care about them, or they don't have any other choice at all. And today the world is full of choices for people that really want to move forward. So I want to mention to you, there's a book called The Dream Manager. The Dream Manager by Matthew Kelly. It costs you $10 to $16 on Amazon. And if you like to read, and you like to read about employee issues, ways to have keep your employees with you, and also how to move forward in your own life, maybe seeing some dreams come true, I'm going to recommend The Dream Manager to you by Matthew Kelly. Okay? It's been a life changer for many people in my 19 years of doing this work, not only for the class members, me, but also Lee, I'll mention this, it's been a life changer for several directors as well. The Dream Manager by Matthew Kelly. Let's talk about integrity now. It's going to be a fundamental trait for you to have a moral compass and integrity. And that cannot be compromised or replaced. The people that will stay in business for the long haul, for the most part, are folks that have integrity. Now, they might have charisma as well. Might have. Because you can find people with charisma that don't have any integrity at all. You can find people with a lot of charisma, that is, they can turn you on and make you laugh, make you smile, talk you into doing things that don't have any character at all. My friends, let's find folks that have integrity and character. Can't replace it. The more that you can find, the better your company's going to be, and the better your chances to dodge a lot of bad bullets that may head your way. Find people with integrity, and you find it as well. People often say that they don't quit a good job, and I know that's true. I've had the same job now for 66 years and had a lot of other jobs, and about 3 jobs. I've always been keeping 2 or 3 jobs, it seems like, my whole life. But I want to tell you that when employees are involved, very seldom will one of your employees quit a good job, but they will quit a boss. They will quit a bad boss. And maybe this is the role that you're in now or will be. And I just want to remind you that as you're hiring employees or maybe staff, you always got to consider, is the manager of your other employees someone that has the same values and guides that you use to make sure the employees are getting a fair shake, know it, and that you're getting a fair shake as well? Or is the boss a taskmaster, just someone that's trying to climb up the ladder on other people's backs? A lot of those folks are out there, and if you learn to recognize them, we have to deal with them. But we need to identify who actually has the integrity and the character and looking out for the team. It's the team that's going to keep your business moving forward. So That's enough preaching from the soapbox. I want to talk to you about getting in the game now. We're in class 6 or 7. You're still in the stands maybe, and if you're ready to get out there and get busy, here's what you want to do. Get on Facebook and web pages and start marketing. Do YouTube introduction videos are very powerful. Testimonials. Do your mission, vision, and promise statements, and send me copies of it. I'll help you with it. Product photos, vehicle photos. Do your YouTube training videos. Get some business cards. How many of you got business cards right now? How many of you have got business cards right now? Give me a yes or no over in the chat board. Do you have business cards? Yes or no? I'd like to know. And if it's a no, then today think about getting you some business cards, because it's certainly the first step in you being able to introduce yourself and folks that are reminded to do that. I got some no's coming. I got a digital card. Yeah, well, believe that don't count. I want a card you can pull out and hand me in the restaurant. So get a card that you can hand out very, very easily. Excuse me, I got customers calling in, and I'm leaving them a message when I touch my button here, but that's just showing you that I'm doing it, not read a book and talking about it. Okay, get on Facebook, testimonials, let folks know that you're ready, start taking these lessons to heart. So get a drink here. So Lee, let me mention to you, since you're with us, if we were doing a 1-hour program, we would have cut everything that I've done thus far way down. We wouldn't pretend that it's an academy class that continues. We could just start out right into the business matters here. So bookkeeping, forecasting, negotiating are our subjects today. You got some study guides that are very important. We won't go into those, but they're really good and go along with these lessons as we talk about different things. On the bookkeeping side, what is the bookkeeper? What do they do? Why are they important for you? We all know that, of course, they do certain stuff, but I want you to understand the basics that they do and how they come about doing it. We need bookkeepers because we need to know what's going on a daily basis, on a weekly basis, and on a monthly basis. Someone needs to be counting the beans. And the bookkeepers, that's what they do. They're the bean counters. They separate it all out and look at it individually and put it back together into a report and tell you what's going on. They do it every day, every invoice, every check. Bookkeepers handle it all. And it's the accounting record of your business. So their accounting functions are bookkeeping and generally what the accountants do, two different functions. The accountant's role is to look at the big picture, look over the bookkeeper's shoulder, keep an eye on what they're doing, look at the monthly totals, the annual financial statements, tax returns, things like that. But it's the big picture that the accountants do. Now, you can have a very experienced bookkeeper that can do pretty much everything. You really can. But you want if the bookkeeper is not a CPA or an accountant, you want your bookkeeper who's doing these important functions for you to have a liaison, a good communication link with a CPA, so that if they come across something that their software or their books are put in question, that they have someone they can rely on. They got a relationship there. But the bookkeeper is on the daily, monthly, weekly focus. The accountant is on the annual focus, more or less. But bookkeeping comprises of looking at all your different financial transactions, money in, money out, cash flow in, cash flow out, keeping up with your debits and your credits. Bookkeepers oftentimes actually do the invoices for you, but if not, they will manage all the invoices after they have been written. They work with ledgers, big sheets of paper, if you want to say it, or big charts on the computer screen. That's what they do. And sometimes bookkeepers do your payroll work if you got a number of employees. Lots of functions there, but very manageable. But a bookkeeper now looks at doing their work relating to your documents, to your invoices, kind of very simply, and I like to say to them, your job is easy because all you do is start out with zero and you end up with zero. How difficult can that be? So looking at this chart, picture right here is a zero right here where my cursor's whirling around on the screen there. And we're going to go through a cycle with every invoice, without every payment coming all the way around and end up with another zero over here. Yep, we're going to take all the money coming in, separate it out and see what different areas that it was generated from or paying for, make a list of all those areas, individual items, then we're going to put it back together so that the big numbers that we started with, separate it into small numbers, bring it back to the big number. And what are we going to do with that money that we took in? Okay? So we're going to follow this circle, and I'll show you how that works. The main tool for a bookkeeper is a chart of accounts. And now that is a very important tool for you as well, because your chart of accounts in the bookkeeping system is showing by number different account numbers for different types of income that you have. And usually those are 100 numbers. You have to assign a number to your accounts. So, and then you will have a large number of different accounts in your chart of account that represent the different ways you're spending money. That's your expenses, your liabilities. And generally, new businesses set those up as their 200 numbers, 200, 21, 202, 204, and so forth, all the way down to 299. And then there's other items in a chart of accounts, which are kind of your equity or specialized accounts. And people usually start at 300 and go up from there to 900 numbers, just put whatever number feels good for them. For items like owner equity stuff, loans, payments, dividends, interest, things like that. So the chart of accounts is the identification factor for the different types of expenses and different types of income. Now listen, isn't that interesting? Because remember when we did our budgets, remember when we did our business plan, we had these different business models, expenses and income, different models that we put together? Right back here to your chart of accounts. This is what this all ties together in a circle. So these different types of income models that you had in your business plan can be numbered and entered into your bookkeeping system. So you as the sales manager, business owner, master of the budget, you'll be able to look at those items by a particular number, and then look at your bookkeeping reports as they come out, and immediately know what's what on that chart of account. And that's what I want to encourage you to do, is to understand your chart of accounts so that when you see the report, you can actually relate it to sales and see how different aspects of your business are doing. So back to the individual bookkeeper sitting there doing their work, he or she doing their work, and they'll set up their different chart of accounts all different ways. But every business is a little bit different. This one, for example, is set it up in a real simple form. I copied this off the internet to show you that this is like maybe a hardware store or something like this. So fundamental, every transaction, when you pay a bill, will have a check number on it and a date, right? That's right. Check number and date, and you'll keep up with those records based on the check number and the date and the amount. Every transaction that brings in money will have an invoice number on it, invoice number, description, and date. As you write invoices in your business, and this is the monetary record of your business activity, each invoice number needs to be dated. And you want to keep up with these invoices in numerical order. And you want to make sure there's a date on each invoice. Because through the years, and every business person gets lots of inquiries and lots of reasons why they have to go back and look at an old invoice. Right here in front of my keyboard, let me just pull this up. Look here, these are my invoices that I've written this month, right here. Doesn't write much business. Right here, my invoice dates and numbers right in front of me. and back in the filing cabinet. Filing cabinets are full of these papers. And every week, every month, every year, customers will be calling you wanting some information that makes you want to have to go dig up an old invoice to give customer service here. So you want your invoices numbered in numerical order and dated. And then as you're keeping up with your records that we'll talk about next week, you'll be able to find those. Some people will use the same date, use the date, current date as the invoice number, and that makes it kind of easy for them. I'll show you an example of that later on. So here we go. Let's say here that Laura is in the gift store business. She has a store with little gifts in it. And Laura, congratulations on your new store. And I'm going to use you an example here as someone that that's got a nice store and you're selling gifts, and some of the gifts that you're selling are candles. So this invoice is on your screen now. Invoice number 121216 is an invoice that the store has sold to a customer a box of candles. So let's check that invoice number out, 121216. Well, that could be just the next number that you've got coming along, or that could have been that's indicated that they wrote this invoice on December 12, 2016, right? So that's the way you started. And if you first number that date, if you're going to use your date as your invoice number, then you would put a -1, -2, -3, all the way up there, how many invoices you're going to write. Now, every invoice in a business has to be analyzed. Now, in the type of business I'm in, I probably don't write about 10 or 12 invoices a week. 2 months ago, I'd write probably 50 or 60 invoices a week. I sold one of my businesses, so I don't do that part anymore. And back when we had large brick and mortar stores and lots of parts being sold to local customers, some weeks we'd have 100, 150 invoices, and then you think about a store like Food Lion. I bet they have 3,000 invoices a day. And with 3,000 invoices a day, that's why those fancy ad machines and computers analyze those. But now, we're just getting started, most of us, so let's look at it doing it by hand. So Laura's got this invoice in front of her. She's just handed it to the bookkeeper and says, I want you to break this down and show me what's going on. So the bookkeeper with her chart of accounts says, okay, this candle sold for $8.56. Right off the top, 7% of that was 56 cents in taxes. So automatically, in all bookkeeping systems, you put that tax money aside. You pigeonhole the tax money. You don't spend it. You put it to the corner so that when it's time to pay it, it'll be there. Okay? So number one thing the bookkeeper will do is deal with taxes and set that aside. And that leaves $8. So the sale was $8. So how are we going to break this down to show Laura where that money came from and maybe where it's going? Well, $2 of it was basically what the actual box of candles cost her. That was her invoice cost. 55 cents was the freight, the incoming freight. That would have been a different chart of accounts. And Laura is really a great boss, and she indeed gives her sales clerks a 10% commission on what they sell. So 80 cents of that $8 would be set aside for sales clerk commission. She's also very aggressive and has customer loyalty plans in place that she allows 5% of her pricing for every product puts in there a way to keep up with customer service and loyalty would go right into her pricing method as well at 5%. So 40% of this, 40 cents of this $8 would go towards the customer loyalty plan return on investment, actually. Also, she's got structured marketing plan there where she allows 6.5%, which is kind of an average in retailers, marketing expense for everything, so she'll take 52 cents of that money for her investment in advertising and marketing. Let me show you right here that last item, 52 cents, is a direct reflection of her having a look and hook advertising campaign so she can monitor what ads bought that sale in. And if you know where your marketing money is making you money, then you are able to bring it back in as a return on your investment. But a footnote here is, if you don't make an investment in marketing, you're not going to get a return on it. So from this box of candles, we have determined at $4.27, we know what the expenses are related to that cost of sales there, which was 53%. That leaves a gross margin there of $373 or 47%. And my friends, in most situations, 47% represents a very nice return on your investment there. And that would be the margin for that particular model. In your business plan, if the model was a box of candles, then that would say that each box of candles will bring you back in $373. So here we go thinking, well, I can see right here what my candles are bringing, how much my clerks are making. By breaking it down like this with your chart of accounts, your bookkeeper is going to be able to tell you how much money you're making on different items. And that's important, because lots of items you think are going to make you lots of money, and they may. Well, here's one making you 47%. But it's only $3.73. So if you want to make $100 selling candles, you're going to need to sell about 30 boxes of them, right? Yeah. And if you want to make $5,000 selling candles or selling whatever else it is that you're doing here, you can take your bookkeeping information and determine your overall net profit or net margin on each item that you're selling. Your bookkeeping information can give you that if you set up the books properly. So we've gone through this and done quite well with it. Each one of these breakouts now, we're going to plug them in into our journal entries. Getting back to our circle now, we're going to go all the way around. We're going to look at this invoice just as we've done it, and we're going to do it for every invoice. And we're going to plug it, pull out those journal entries for our different chart of accounts, and we're going to write them down or type them into our software, and that's called doing the posting. And after all of that's done, we're going to be able to do a trial balance. That is, we're going to add up all the little numbers and see if they come back and equal the big number. We're going to take our sale price, break it all down, add up all those numbers, and see if we come back to where we're supposed to be. And as we do that, we'll create a worksheet if we're doing it on paper. On the computer, it just be continue on. But now we're going to come over to a place that's called adjusting journal entries. And in every bookkeeping function and accounting function, there's a place to make adjustments. Because when I sold that box of candles for Mara, I didn't get 56 cents. I made a mistake and I only got 46 cents. But you know what? We owe the state 56 cents because you have to pay the taxes that you owe whether you collected them or not. So when we come down here, our bookkeeper sees that there's a 10-cent error. And in this adjusting journal entries, they will make that adjustment and actually put the amount of tax we actually owe, because that tax needs to be set aside, but make a footnote there why there was an adjustment. Now, bookkeepers really love to have this adjusting journal entries because they represent their get-out-of-jail cards. Because when a bookkeeper is challenged in an audit or a fraud case or mismanagement of money, someone says the bookkeeper was cooking the books, you know. Well, they can go back to their adjusting journal entries and show exactly why numbers were adjusted and such as that. Sometimes they're really big numbers, sometimes they're minute, but still, the place that a bookkeeper protects themselves is these adjusting journal entries. And I have recommended through the years that bookkeepers keep a copy of those, keep a record of those, because you don't know a number of years later if someone might come up and accuse you of something and you need to protect yourself. So after adjustments are made, we write those down, and that's called your financial statement for that particular invoice. And then you move towards closing the books. Well, how do you close the books? Well, let's say that we have done this with all of our invoices for today, and we'll have a master sheet that shows the daily sales. And if those daily sales shows that we put together all these numbers and put them back, and let's say we brought in, say, $1,500. So over here, as we're closing the books, the income was $1,500, and I'd have my bookkeeper write a check for $1,500 to go into our main account, and there it would be. She'd be able to hand me the accounting cycle showing how much money was taken in that day, and a copy of the bank deposit for exactly the same amount of money. Therefore, we have cleaned their plate. We've got a good bookkeeping day. That's the way you do it. And as you're getting started and you start creating lots of invoices, no matter how many they are, you go through each one of them, you separate them out, you put it together, and you see what happened to the money. You have a document, you have a bank slip, a deposit slip that says we took in $1,500 today, and here's where we deposited it in the account. Now you don't have a record of it in your checkbook and on your checking account as well. The same type logic applies to all the checks that you write. We started out with X amount of money in the checkbook. We wrote all this number of checks, and here's our balance for today. And you put that information right with your deposits, and the owner of the business, the manager, you're able to see exactly what happened with your cash flow. That's kind of what it's all about, right? And what made you money and what didn't. So we need to talk about now, too, when in bookkeeping, you need to have a separation of duties from the security standpoint. Because you don't make money. It's amazing how much money can come into a small business sometimes. And folks that have things they're dealing with in their life, sometimes we need to do all we can to help them stay honest. We need to do all we can to help them stay honest. And so that's important that we do that. One way is separating the different duties in the accounting and bookkeeping area to make sure fraud doesn't happen or errors. So one way to do it is to make sure that the person that is writing the checks, the person that's preparing the checks, is not the one that's going to sign it. That's a simple, easy way to do it. I know in today's world that a lot of people are still writing checks more than you would think, and while so many of them more are doing it on their computer or with more and more sophistication. But after the checks are written and printed, then maybe there you can require two signatures to help give you some security. And then other companies will say, well, my bookkeeper does a good job. I'm going to let them go ahead and write all the checks and pay the bills up to maybe $500, and any checks over $500, me or my vice president need to sign them. You can set up different strokes for different folks and whatever your priorities are. I want you to have a stamp like this one right here. I want you to have a stamp that when a check comes in, you're able right then, without any reservation or hesitation, stamp that check that says for deposit only. And if you don't have a stamp, then get your pen out and write on the back of that check for deposit only. And if those words are on the back of the check and someone robs you and steals that money, they're not going to be able to cash that check. If it's got for deposit only with your name or your company name on it, that's safe. And that is a big, big safeguard. If you're in a business and you're holding on the money, maybe a day or two before you go to the bank, at least with your checks write for deposit only on them, okay? Incoming mail, it's important that the owner of the business opens the mail, because when you open the mail, you're able to see if the bills have been paid or not. You're able to look at the bank statements and see if there's any checks on there that you're not familiar with or handwriting that you're not familiar with. Also, you'll be getting letters from your people you do business with, from your suppliers, and you can see if your bills are being paid on time like you thought they were. If you start seeing past due notices coming in on items you thought were paid a month ago, then you got a bookkeeping problem, okay? And that's the way you do it. Maybe you don't want to open and read every piece of mail, whatever reasons you have, but let me encourage you to at least open the bank statements. Open them up, spread them out a little bit, mess them up a little bit, so whoever's analyzing those bank statements knows that you're looking at them. There's another set of eyes on there, okay? That'll go a long way. Your bookkeeping systems now, and QuickBooks, Intuit, and other software are able to give you some fantastic charts. If you plug it into the operating system, that when you run a monthly report, it automatically gives you certain charts from wages to leave to different items that you're selling, different profit margins that you're selling on different items. It's amazing what the charts can give to you to help you with your management skills. So give that some consideration. Graphs and all type of other things are available. Let me talk about payroll for a minute. Sometimes the bookkeeper is charged with the payroll duties. And a lot of times in new companies today, they're letting some other company do the payroll, which I'm not saying either here or there. But here's what counts. The bookkeeper works for you, the owner. The bookkeeper doesn't work for the other employees. So you want to set up a company policy, I would suggest, that if an employee has an issue, needs to talk, argue, complain, bitch about their check and the deductions or the hours that were credited for, that doesn't need to be the bookkeeper's problem. Those type of issues you want to handle yourself, or you tell that employee to talk with their manager or their supervisor or to come to you. And if an issue needs to be resolved with the bookkeeper, I suggest that you do it. Yeah, it's going to be a little time because it'd be a lot easier for you just to say to an employee, go work that out with the bookkeeper. And maybe at some point in time, if you've got a long-term staff and there's hardly any problems at all, okay. But in the beginning, you understand how it works and what their complaint is, and listen to them. Because they probably work somewhere else, but maybe they're more familiar with how this works than you are as a new entrepreneur. So listen to them, resolve it, and then work with the bookkeeper. What you don't want to have are arguments between the employees and the bookkeeper. That's going to come back and bite you bad, okay? Next, you're hiring a bookkeeper to keep your books, but you know what happens all the time is not only do they get to keep the books, they get to answer the phone, they get to make appointments, they get to greet and chat with everybody that comes into the office if you have a bricks and mortar stuff. They get to run all your errands to the bank and the post office and bring back a biscuit or get to the office supply place. Many times the bookkeeper does a whole lot more time-wise on things other than keeping the books. And that can get to be a real problem, especially if you have a good business. I want to suggest to you that you set the bookkeeper up at a place they can do their work privately and without disruptions. Because it's hard to focus as you're doing this. They don't need the interruptions. Now, I always was able to have an assistant from a bookkeeper or a receptionist, and the bookkeeper was able to get their work done, and pretty much they had a full-time job. But their charge was to get the work done, balance those books first. What happens if the bookkeeper is so distracted that they always can't quite make things balance and can't quite make things work out, and they're constantly having to call the accountant to see what's wrong, to get assistance from that? And sometimes that is every day in some businesses. The bookkeeper is constantly having to call the accountant for this item or another. Well, the fact of the matter is, when you call the accountant, the meter is running. They charge you for time, for hours on the phone, for interruptions and things like that. And this can add up to a big bill over the course of a year. When simply, if you just got the bookkeeper properly trained, yeah, they don't have problems to begin with, but then let them focus on their work and finish, get back to those zeros, get back to those accounts before they started doing any other errands or any other work. Usually in a small business, you can get that done in the morning. And so therefore, in the mornings, I would bring in a part-time helper to do the reception work, answer the phone, run errands. Depending on what your business is, find a way to let the bookkeeper do their work undisturbed. And in the long term, you'll be a lot better off. The slide says chess move strategies. We're going to move away from bookkeeping. Let me ask, does anyone have a bookkeeping question that you might want to ask Steve-O here before I move on from the bookkeeping topic? You're welcome just to turn your mic on and ask the question. Okay? Or if you have any that you think, I'll type it over in chat, and after we're through this afternoon, I'll send you an email and let you know. Okay, forecasting. Man, the forecasting has been on the news here recently between the wildfires and the floods and pollen, and we're going to get to our first 90-degree day this weekend, I think. Everyone's into forecasting, and the weather is always important for every business. I know that too. But that's not the kind of forecasting we're going to be talking about today. Yeah, if you're going on a cruise, forecasting is really important. You want to know how big the waves are going to be for the ship. And if you're in the farming business and making baby animals, you want to know when the green grass is coming. So that's when you can have your little babies born, so they have a nice outside weather while they're young and tender. A lot to consider. And if you're in the fighting forest fires, you're really interested in forecasting, because if it's real dry and you get some lightning strikes, you're probably going to get a fire somewhere. You need to stay on top of that forecast to help put the fires out. But I want to talk about this kind of forecasting, small business forecasting, the kind of forecasting that if you do not do, you end up with this sign in front of your business, going out of business. When you investigate businesses that have gone out of business, generally it don't take you long to see that the owners didn't do a very good job of forecasting. Hence, that's why we got a session on it this afternoon for y'all. The importance of different types of forecasting is where we're at. The word is turns, T-U-R-N-S, abbreviation for turnovers. Nothing makes you any profit when you have stock, when you have inventory. You can have as much of it as you can put in a warehouse. But no money is made until it turns over. No money is made until you sell it. No money is made until you turn it over. So the number of turns you have is one of your most important functions in forecasting, because you want to have the right amount of inventory, the right amount of stock on hand to suit your sales season, your needs. If you got too much, you got your cash flow tied up in inventory that's not making you any money because it's not turning over. If you got too little or an empty basket and maybe a lot of money in the bank, you're not making money because you're running out of everything. The magic number is through forecasting. The magic number is through planning a marketing campaign that gives you a good idea of how much you need in stock all the time. That's management. That's real management for your owner. And you're going to need to master this as soon as you can. Using your business plan and talking with someone that's been in business there before, understands the market flow, the cash flow, the seasonal flows, will be a great benefit for you. So you may have to reach out and get some expert help before you can come up with a reasonable estimate. But it needs to be done, because forecasting your turns is all about how much money you're going to invest in inventory and when you're going to need it to have. Next big challenge forecasting is staffing issues. Number one, I don't consider you the staff, even though it may be a one-man show or one-woman show. You're the staff. And are you trained now? Are you ready to do business? Is the company ready to pay you money to have you be on board and do business? So forecasting the needs and the timing about what you're going to need to do with staff work is really important. And that has everything to do with your marketing campaign, getting ready to sell these products and having people on board when it's time. What you don't want to have is a grand opening. Spend a lot of money to bring a lot of people in and not have the staff there to satisfy them. If you do that, you're going to end up with people going away from their first visit to your store unhappy. And that's not a good thing. We don't want to do that. Cash flow projections, big words, important words, just common sense. If you've got a sale coming up or a season coming up and you've ordered in a certain amount of products that you can have here ready to sell before the season starts, then when is that bill due? When are you going to have to pay for that stuff? And if you don't have to pay for it before you sell it, that means you don't have to make some arrangements, some forecasting arrangements, and have some money ready to pay the bill when the stuff comes in. Or on your first big orders, you're going to be late pay. The vendor or the supplier is not going to be happy with you. And two things are going to happen. You're not going to get any more orders from those folks. Or two, you're going to have to go borrow a bunch of money that you didn't expect to pay the bill. Neither of those will happen with good forecasting as you make plans. Because if you're forecasting right, you may have said to the people, look, can you send this on in and then give me a few days to sell some of it so I can get my cash flow moving? Vendors understand this. Suppliers understand things like this. So don't be afraid to talk to them about it. How can you help me with my cash flow? Some of them might give you free freight, might give you some terms on it to help you sell it off before you have to do it. A good example is you see these trailers outside of furniture stores with mattress sales or sofa sales or pine needle sales, depending on what it is, big trailers outside of businesses. Generally, those vendors have said to the store owner, we'll send the inventory in, you pay us as you sell it. That's a good way of doing business for everybody if it fits your particular business plan. So keep in mind, keep up with your cash flow predictions. So how about risk management now? What can you do not to get caught in a bind? First of all, I suggest that you consider the businesses you're getting into and list anything that you think might be a harm to you, a risk you think might hurt you. And then take those risks and put them in the different categories, kind of make a summary of them, and then find someone that can give you good advice on how to manage those risks. The small business center people, me, insurance people, whatever business you're in, I'll assure you that the independent insurance agency in your neighborhood or your community can type in on his computer and tell you all the risks that are related to the business you're getting into. That's a big statement. But why? Because that's what insurance companies do. They are all about risk and risk management. The better management you're doing, precautionary moves you're making to help prevent accidents, indeed determine what your premium cost is for your insurance policy. That's right. And they will, sometimes insurance companies will give you a very good rate to get your business to get started. But they're going to tell you in 6 months we're going to come by and see how you're handling your risk management. And they'll send an inspector by, look at your business, what you're doing. They call it an insurance audit. And we'll determine whether or not you're paying attention to the risks that are involved in your business. The better, more effective attention you're paying, the better risk management tools that you're putting into place, the lower your insurance premium will be. When you're doing not so good a job, that insurance premium is going to go up. How do you do all this, Steve-O? Just find someone that's been in business before and talk to them. We'll be glad to share with you the information you need. If you're brand new at it, someone gray-headed out there that's been there in your place can tell you lots that you need, and a good seasoned independent insurance agent will help you as well. Marketing strategies are really important. So when you're coming to forecasting, we're going to move over now into your marketing. What we want to do with forecasting when it comes to marketing is to have the very right product, right style and quantity, right sizes, have the highest retail price that we can that the market will stand, and have the lowest amount of money in it, have our lowest cost. That's the best risk management work you can do when it comes to selling. A bottom line tool, fundamental that I've mentioned before, is you want to purchase below fair market value so you can sell above fair market value, as per our previous courses. So make sure that in forecasting you've gone through those skills to do that. Now, negotiating and forecasting go hand in glove, with forecasting coming first and then negotiating coming second. Because you can negotiate a deal and you can forecast how it goes. I want to tell you that a lot of you, if I would ask you the question, can you forecast how a negotiation will go? Most folks will say no, because it's a negotiation. You can't really figure it out until it happens. And I will shake my head and say, if you don't learn any other important lesson that Steve-O has for you, is that that's not correct, because you can come really close to forecasting how a negotiation goes. And the key to that is total preparation. Before you get to the negotiation, already have in your mind and on paper if possible what your target goals are. What are you after here? And what terms can you work with? What concessions can you offer? How wide are your river banks? How wide is your lane from yes to no? How much room do you have to negotiate? Total preparation lets you enter a negotiation ready to do yes. And the most important key for your success in negotiating is your attitude. When you walk in the room and you've got the attitude, hey, I don't do business here today. I didn't come here to lose. I've come here. I'm well prepared to negotiate, give you a great deal so that we can get the business done and have a great relationship started and move on. I'm here to win. With that attitude, you will win. But you can't have that attitude without total preparation. Now, a lot of experience goes a long way in that, of course. And some of you might say, well, Steve, that's just luck. And I don't disagree. But I will give you a footnote you're welcome to use. In my determination, luck is the residue of planning. Luck is a residue of planning. And I think that if you do a lot of good planning, a lot of good forecasting, you're going to have a lot of good luck, and vice versa. You don't do planning, then I doubt that you're going to have good luck. Okay? My opinion. This success comes a lot to do with your introductions. The very minute that you're introducing yourself to your negotiating partner, who is that? Yeah, who is a negotiating partner? That's who you're doing business with, my friend. We don't want to consider these people that we're doing business with enemies or foes or that they're against us. We want to consider anyone we're negotiating with trying to sell a negotiating partner. We're both in it for a win-win situation. I want you to be very happy with what you buy from me, and you want me to make enough money so I can be here the next time. That's a positive situation. And if you adopt that as how you feel about it, things will go better from your introductions to begin with confidence. When you sit down and position yourself beside someone instead of across the table from them, so that you're able to look at it and say, hey, I'm on your side. It just changes the whole atmosphere of the negotiation when you do that. When you're bringing your proposals and your quotations, they need to be works of art. Professional, typewritten, some imaging, ready to sign. Ready to sign. Do you hear that? In other words, you've done everything on this piece of paper you can do other than the last number that has to be written down or signature that has to be had. Because if you're doing it in advance, then that means it's done. You can present it as hey, this is the deal. It's a good deal. Sure, things can be changed or amended, but you need to come prepared to put your initials there and have a deal done so that we're not messing around with pen scratch. So we're not messing around with items that people can't read, or all right, I'll prepare the documents and bring them back so you have a delay in the closing. Come prepared with the work of art. Lastly, especially for new business folks, frequently ask questions. In all types of business selling, all types of products and services, your customers are going to ask you basically the same questions over and over and over, year after year. Different customers, same product, the different customers that have the same questions that last customers had. They may vary a little bit, or some will add one or two, but in a short period of time, you'll be able to make a list of what people are going to ask you about this product. And here's the secret. You go ahead right now and write an answer down under those questions. That's a good answer. Intelligent, informative, makes you look really smart, makes you look very professional. Yeah, and you tweak them as you go. And as you do this through your years, you'll end up knowing the answer immediately to pretty much every question someone has for you. That's a good answer. And you come across as the pro. When you're able to share these questions with a new employee and share the answers with them at the same time, that is a super training tool. Super. Because that brand new employee is going to be responding to customers the same way that you would. So you'll get very few surprises that way. It really helps them too. Lastly, having a list of frequently asked questions and answers, you're able to take those and put them at your website, do a brochure, have a handout on them, a cheat sheet, whatever you want to call it. This can go a long, long way to helping you be more ready, more prepared as you move into a negotiation. When we're negotiating, it's good for you to have the range, the money range. We're talking for money now. How much can you expect to ask charge in this? What's the smallest amount that you can sell it for and still make the money you need in business? Those ranges are important because between every negotiating offer and counter offer, they're going to move up and down the line. And you want to have those ranges where you can have several options to go with before you close a deal. I call it a roadmap of offers, and counter offers are really, really important. In negotiating to close the deal, value-added features are your secret weapons. And we all need to know what our individual secret weapons are for whatever we're selling or offering. Things that the competitors are not offering, or things that you can bring out at the last minute to help move that customer into saying yes. Value-added features. Maybe less deposit. Maybe free delivery. Maybe assembly. Maybe meet you on a weekend to close a deal. All kinds of different items. All of us have different items related to what we're selling. Have a list of these little things that you might be able to throw in at the last minute to close the deal. Sometimes that is amazing powerful. So just give that some serious thought. One of the best secret weapons that I can tell you right now that you have is your ability to close the sale. Now, next week we're going to get into this with actual exercise, but your ability to close the sale, how good you are at it or not good at it, will determine the success of your business lots of times. So here's a little secret. In closing, being able to capture a moment. That is, you're working with a customer. Maybe you never met them before, maybe you have, but now we're talking on a give and take. We're on a channeled conversation about this particular item and closing the deal on it. When you take that regular conversation and determine that you're ready to close, that the customer now is at a point that they're not showing any anxiety, that they're giving you buying signals or feeling good signals, and you're ready to move the conversation into deal closing, it's time to be assertive and it's time to motivate. So how you do that is capturing the moment. You maybe start being a little bit dramatic. Maybe you have some silence. You just pause between your statements. In other words, you bring their attention in from general conversation to really hearing what you have to say. It's important to do that because at that point in time, you're able to have eye contact, turn your volume down so that they're listening. You're able to start doing gestures to bring them into a mental area of ready to do business and closing the deal. Once you do that, you can move forward with it. I want you to remember that when you're going out and buying, professionals all through time and throughout the world will tell you that it is imperative. The good negotiator will always have something they call BATNA, a best alternative to a negotiated agreement. That's to say, find what you're looking for and have a good idea where you can get a good deal on it and what that price is and what the terms are. In other words, if you were in a hurry, you knew where you could go buy this thing right now for X amount of money. That's initial preparation. But now the negotiation starts. That's just the start because you'll take that offer that has been made to you and you want to go out into the world now and find a better deal. That's when you start saving money. In talking with people, negotiating with them, the key factor is to keep the conversation going on. We're not going to say take it or leave it. No, we're not going to say take it or leave it. We are going to say, hey, I've got this deal. Here's the price on it. We got some options to go forward. Keeping the conversation going is your secret to success in negotiating. And I wrote a little book called Yes If, No But Negotiating. And it gives you defined points, examples and slogans and way to do it of how to keep a negotiation open to give you time to find common ground. Now, your handout today's got a lot of this information written right in it, so I'm not saying you need to go buy the book, but I did write it, and it's at Amazon, and it's on sale for $1 or $2, but at any rate, the key factor is that yes, if, no, but is a system of negotiating that keeps the conversation alive to give you a chance to close the deals. 4 basic fundamentals. You're going to be a negotiator, you want to remember these. It's a balancing act, a scale act. You want to keep things in balance. So you're not going to give up anything unless you get something in return. That's just a fundamental way of thinking about it. Not going to give it up unless I get something in return. I don't do all I can to get my negotiating partner to make the first real offer. And the way you do all you can do is that you set your advertised selling price high enough to give you plenty of negotiating room. And then they'll see that price, and then they've got the option to make you an offer. Nothing happens in negotiations until somebody makes an offer. And you'll be best prepared if you let the other person make the first offer, so you'll be able to take your planned negotiation factor and plug his offer in to determine what your counter offer might be. Okay? Always, fundamental, never be afraid and always ask, entering into something when you're buying, now, is this your best price? Is this your best price? I don't have time for a lot of jibber-jabber here. Is this your best price? Tell me what it'll take to get this deal, lowest price you can offer me. I call that the poor mouthing tactic. And it was taught to me by Sampson County farmers over a long period of time. No matter what the price was, high or low, that farmer would always say, oh, come on, Steve, you can do a lot better than that. Tell me what the best deal is you got. Now, this is effective, my friends. Maybe you've never bargained before and don't feel good about this, but get with it. Say these words. Now, really, is that your best price? Tell me what we can do. Because with that, especially with an inexperienced negotiator, they will just tell you, take all the fluff out of it and give you their bottom line right up front. It might be $5,000 less than you expected or $5 less than you expected, but whatever it is, it didn't cost you one penny to say, is this your best price? It's real. It can save you so much money. Poor mouthing is good. Now, let's say you're on the other side of the fence and you're the person doing the selling. And Laura came up to me and said, now, Steve, I really want that, but is this your best price? I'd say, Laura, I'm really close to the bone here. You know, I don't have a lot of fluff in here. But what I'd like to hear from you is what can you offer me right now that you can write a check for or you got the cash? Make me an offer. See how that works? You don't bite the bullet on giving your best price. You just say, hey, I'm really close here, and you appreciate them saying that. You're nice. And you come right back and say, I'm close, but what can you do right now? And you know I'm close. And indeed, you may get an offer that's higher than what you expected in your plan. Or maybe you know what your boundaries were based on what we said before. Your counter offer might be a little more to get you exactly where you want to be. Don't close the process as long as you think there's a hope to make the sale. Keep talking, keep hope, and close your deal. Again, it comes right back to yes if, no but. Liz said, Steve, I'd like to buy that car you've got out in the yard out there for $5,000, but I can't quite go $5,000. Let me ask you, would you take $4,000? And I say, Liz, I appreciate you got that $4,000 offer. And yes, I can take that $4,000 if you don't make me put that new set of tires on it. Or, Liz, thank you for that $4,000 offer, and I was really needing $5,000. No, I can't take $4,000, but if you don't make me put that set of tires on it, I can. So yes, if, no, but gives you a way to take whatever offer comes your way, and you don't have to say no or yes, but you can say no, but, or yes, if, and come right back and keep the negotiating going. It won't take you but a few times working with this plan to become really good at it. So give it a try. It works. There are a lot of negotiation tactics employees. Matter of fact, there's 21 of them, and I think they're in your handout, so I've given you a handout on that. And they're used all over the world, taught by all the universities on earth. But I want to talk about the nine most important, in my opinion, ploys and tactics that we all use in negotiations. First is one that's fairly new in the world, and you probably won't find this in a lot of the textbooks, but I've got it in here because I see it being used all the time. And I call it burst the bubble. Burst the bubble is when someone calls you up and says, I'd really like to make an offer to you on that item you got for sale. but I can't even come close to what you're asking for it. Would you mind if I put an offer together and made it to you? You wouldn't get mad at me? Well, the answer to that is, what are they up to? They're setting you up for a very low or lowball offer. And they're just setting the stage so that it doesn't appear to be out of the blue and maybe make you mad or something. And it's a good tactic. But what do you do if you're on the other side and you're the one that's hearing someone say this? And it's easy. You say, hey, man, I appreciate any offer. Go ahead and tell me what's on your mind. Prepare your proposal. I'll consider it. You're always open to offers, my friend, because that's what we come here to do business for. And we don't know how high someone can go in paying, and we don't know how low someone can go in selling something. And until that negotiation starts, you can't do it. So yes, I will consider your offers. You're not saying I will accept it, but yes, let me hear that offer, because that gets the momentum going. Flinching. Long time ago on TV, maybe before any of y'all were even born, Fred Sanford and Son was a TV show, and old Fred was a junk man. And when someone would make him an offer on something he was trying to sell, he'd say, oh man, I feel the big one coming on. Lord have mercy, that offer is so low it's giving me a heart attack. He flinched. He showed a physical reaction to an offer. And flinching is a really good negotiating tool, especially when one side is inexperienced. Because when you show not saying anything, Fred made a big show out of it, a drama, but when you show a physical issue, I mean, you're showing it physically, the way you do your head, your body language, such as that this offer someone's just made to you ain't going to fly, then they will automatically come back and say, well, how about if we do this amount? What if I reduce it to this? Flinching is very important. And I'll tell you that a gentleman can do it just by turning your head down, something like that, or just kind of shaking your head and wringing your hands out. Not saying a word. That's a good flinch. Send a physical, nonverbal communication. And next, number 3, sometimes not even doing the physical stuff, but just being silent. Just looking at them with a sour look on your face. And ladies can do this really well, because they not only will look at you, but put their hands up by their temples like that, not say anything. And I don't want you to say anything. Silence. And at some point in time, the negotiating partner will come back and say, well, what do you think? And you just shake your head a little bit, and then they will automatically come back to you with a reduced offer. Or, on the other side of the fence, if it's you that's getting the silent treatment from someone else, and say, I know, you're just trying to figure out how you can make me an offer and say the big number. So here's what I wanted. I'm taking a piece of paper, right? How about this number right here, and put it in right? You know, just kind of move through that to keep the conversation flowing. Now, there's never been a better time for me to preach this lesson with the tariffs being talking. Pending price increases. If you're selling, it's always an option for you to say to the buyer, you know, you might want to go ahead and take advantage of this right now, because prices are probably going to be going up. That's a good motivating tool. Good motivating tool. And if you're on the other side of that, you're buying, and someone says, you know, Steve, go ahead and buy this right now. You might say, well, I'm not in a position actually to buy it or pay for it today, but can you put me something in writing that says this quote is good for a certain number of days? Can you guarantee this price for maybe another 30 days? Always ask for a guarantee on a threat of a price increase. Red herring. That means take the buyer's eye off the ball. Move the attention to the good things. Move the attention away from the bad things. A salesperson doing the red herring is always about showing you something good while not mentioning something that's not so good. Well, if you're on the other side, do your homework. Make sure you look at everything, every detail that concerns you. Some folks will say, I just can't make this decision. I have to go home and talk to my wife. Or I have to go home and talk to my husband or my partner or somebody else. What that is called is retreating to the higher authority. It's used all the time and is real powerful. What this is, and I'll guarantee you that when someone tells you at the end of the conversation they got to talk to someone else to get authority and they'll come back to you, I'll guarantee you when they come back, the chances are really tremendous that the offer they come back and make you is less than the one you're at right now or the place you're at right now. So when you know someone is going to retreat to a higher authority, you always leave yourself one more negotiating room there, one more counteroffer. How do you know if someone is retreating to a higher authority? Right up front, if you suspect this, right up front you say, Liz, now I came to work today to make this deal. I got my trading breeches on. I'm ready to do a deal. And if I can give you the price that you need right now, will you be able to do business with me today, or am I just wasting my time? People will tell you, I can do business today. I got my checkbook right with me, and I can write it for what I want. Or they might say, no, whatever we talk about today, I don't have to get approval from someone else. So you just ask, and usually people will tell you the truth on this, but you have to ask them if they can do business, if they have the authority to close the deal. All right? And if they don't, you always remember, don't you go down to your bottom line. You save one more negotiating room for tomorrow when they come back with an offer. Splitting the difference is finding common ground, working that through. That I'm asking $1,000 for something, and you're offering $500. And I'm going to say, well, why don't we split the difference at $750? You can do that to help find common ground, and if you've done your preparations in advance, and if you've priced your item up high enough. On the other side of the fence, I'll tell you that splitting the difference is a way that you can use this, I'll call it as a game, but a system of increasing the split each time you do it over 2 or 3 splits, and you end up improving your profitability. Showing the cash, you're saying, I've got a check right here ready to write. Do you want it or not? That's as powerful as it gets in negotiating. Don't make this offer if you're not ready to pay the price, either with a check or cash. But if you are, you can say to someone, well, Neo, I've got $4,000 here. You want $5,000 for that item, but I'll write you a check for $4,000 right now, or I can carry this check down the street and give it to someone else. Well, people will give you the very highest consideration with that type of offer. Always be prepared to make the payment, but don't make the offer except for a significant amount less than where you're negotiating at right now, because they may come back with a counter, okay? But if you're ready to do business, then pull the checkbook out or pull the cash out and say, let's do business. Nibbling is really, really easy and powerful. On the buying side, you keep asking for little things. You keep asking for little things. Like you were buying a car and we closed the deal. And now you did say I was going to get this free set of tires, right? Or I am going to get that subscription or prescription to this and that. Or this does include that free gas fill-ups for a long, long time. On and on and on. You keep nibbling, making sure that you're getting everything you can for the dollar. On the other side of the fence, if we're selling that document that's like a work of art, when you close your deal, both of you initial that amount and you drew a circle around it. And then you're able to say, well, sure, I can do that for you, but remember, that wasn't a part of this deal that we just agreed on, and I'll be glad to do it for you, or yes, if I can do it, if you'll ante up my cost of $2 or $10 or $200, or no, but if you'll add up a little bit more money in here, we can do it. Remember, we're coming back to that lesson number one. Everything is a balance, and we're not going to give up anything unless we get something in return. That's the way you protect your profitability. But nibbling is a strong, strong tool. I want you to remember that customers will send buying signals to you. They'll say things like ownership or disappointed when they can take possession. There's a time to be talking, there's a time to be selling, and there's a time to be closing the sale. And when customers start sending you buying signals, it's time that you move from general conversation over to closing. And then once you close that sale, once you close it, you wrap up your paperwork as quickly as you can, collect your signatures, your deposits, congratulate them on being a great negotiator, and tell them you're looking forward to having a chance for more deals in the future, and then you shut up and leave. It's important. I'm not saying you run away here in fear, but you don't hang around, because buyer's remorse is a real thing. And sometimes people will come in that has different opinions or whatever and try to influence the buyer to ask for more of this or more of that. And you close your deal, you make everybody happy. And the key factor is, as you're leaving, you're saying this: wow, you're a great negotiator. You ate my profits up. I don't know if I can ever do this again, so I want you to give me another chance down the road so that maybe I can make a little money on you. But thank you so much. It was a great fun doing business with you. You want the deal within with the other party saying, this was good. I did good. I'm a good negotiator. I enjoy working with Steve. Good people to do business with. Because down the road, at the restaurant tomorrow night, talking to a friend, that person will say, you know, you ought to go do business with old Steve-O. He's a good person to do business with. He gives you a fair deal. You got to let them leave with that really good taste in their mouth for repeat business down the road. How about that? Wrapping it up now. In business, your ability to become known as, have a legacy as a good, great negotiator reminds me of so many people, because if you can establish that legacy for yourself, you're going to get better deals and easier deals all down the road. I've had some farmers, and this is a picture of a gentleman that reminds me of Mr. Ball, who used to do business with us. He bought all Alice Chandler's tractors. He was a great negotiator. He paid cash. He listened to you. He'd do business the right way. That's what I want you to do. Remember, is sometimes the best deal is not the cheapest. You want to look for good vendors, good people to buy from, and good people to buy from you. That's how, and you keep your integrity, you keep your character, let them know you're expecting the same from them, and it's a win-win situation that you're after. That's why it's so important. So as we're wrapping it up here, let me say, let your light shine. Keep it shining. Summertime's right around the corner. Warm weather's coming around the corner. God bless you and your family and your business, and just remember how important it is to every now and then just be still and know that there is a God, there is a Jesus, our Lord and Savior, or find somewhere that you feel comfortable in charging your battery. God bless you all. I'd appreciate your comments and look forward to hearing from you and seeing you next week. If you want this same lesson again, Thursday night, you're welcome to join us. Same login information at 6 p.m., and we're going to do this same lesson again. Thank you so much. Any comments? Liz, did you type in for me your email address and your name? I appreciate it if you would. And Samuel, how about you going over to chat and giving me your email address if you haven't done it already? That way I can send you a video of this tomorrow along with all the study guides. All right, I'm going to say goodbye to all of you. I'm going to leave the screen up so you can type in chat for a few minutes more or ask me questions. Take care. God bless you.